Welcome back. I'm John Najarian. Pete Najarian joins shortly, and we're going to be talking about those shortly folks again, because the markets are down about 1% across the board. So the shorts are feasting. And what does the Treasury Secretary and Warren Buffett have to say about that? A bunch of stocks and some sports as well on today's Rebel's Edge. Bang.
And here we go. It's a wild one, John. We just cannot break out of this craziness of pressure, both to the upside, but primarily to the downside. But this yo-yo ride has been, it's been incredible, right? I mean, it's
interesting is what
we got to refresh every time you're on front of your computer just to see exactly where it is, because that's how fast it's actually moving. It's amazing.
As Strother Martin would say, Pete, yeah, working down here in Bolivia will make you interesting. That's from Butch Cassidy and the Sundance Kid, for those of you who aren't big Strother Martin fans.
He's one of the best. Slapshot might have been his very best, but yeah.
Slapshot was the epitome of his ascendance as a star in Hollywood.
Oh, that's great.
All right, folks. Well, we're going to dive right into Macro Minute. And in the Macro Minute here, which Pete and I discuss every day, today I'm going to say, Pete, Producer Price Index, PPI, fell 0.1% month over month. And then we got, Pete, the Treasury Secretary, that says, Mr. Besant, who says, we're focused on the real economy. Can we create an environment where there are long-term gains in the market and long-term gains for the American people? I am not concerned about a little bit of volatility over 3 weeks. So that's what he had to say, Pete, about the volatility that we've been experiencing. And I tend to think he's right.
We definitely have volatility. I'll hit that on the fantastic future side of things. But I will say this, John, inflation, we got the CPI number yesterday. That showed that we were cooling off. We get the PPI today. That shows that we're cooling off. But the problem right now still remains, it's tariffs, right? And I'm not saying that, they shouldn't be doing or any of that. I'm just saying that the confusion that still exists out there has people kind of running around trying to figure things out. And nobody's been able to really fully figure it out, especially with the back and forth about all the tariff talks. And sometimes some of them are delayed, some are not. But that is the problem right now, I think, is we just don't know enough about these tariffs and when will that start to cool off. And it might take a while. Might take a few weeks, might take even longer.
Pete, I loved when President Trump talked about the tariffs on French wine, and they show him with a glass of French wine swirling. And for those of you who don't know, he doesn't drink, never has. He had an issue with his brother who enjoyed a little too much, I guess. Mm-hmm. And so the president does not drink, but it's a pretty funny picture, Pete, to see a still of President Trump holding a glass of wine. All right. In terms of fantastic futures, Pete, let's say that lean pork is down 9.5% since mid-February. Now, some of that, of course, because China slapped tariffs on it. China loves buying pork from the U.S., but they want to hurt the farmers here by saying, hey, we're not going to just let you put tariffs on aluminum and steel from China. We're going to put it on stuff coming the other way as well. And a little bit of tit for tat, but in terms of consumers, that's good for us, right, Pete?
Absolutely. Absolutely it is. I will say this, John, also. So we did spike up. We know that the high so far, and maybe it changes, was as much as 2960, right? I mean, so that's where the volatility index stopped. And a lot of people are kind of amazed. They're like, well, somebody was holding off 30. Maybe. I think that also, it was a very rapid move to the upside. And now we've had a pretty decent move to the downside until we started selling off again. But we were all the way down to 2350, John. So that's a pretty amazing move in just a few days. It was the 10th. It was Monday where we were hitting some of those highs as far as the volatility index. And by the way, they continue to come in and buy more upside volatility. So I don't know that the markets at least aren't thinking that we're done with this volatile market that we've got, and there still could be plenty more. They did close the short-term stuff, but the further out, a little bit further out and a little bit higher up, there is still a lot of buying and still a lot of positioning that's been put on out there. So just keep that in mind. We may have not seen the very absolute highs of this run, in other words, and it might get up and through that 30 level in the not too distant future. So just keep that in the back of your mind, folks.
Yep. And if we do see a pop above 30, Pete, if that's an if, folks, it's not a like I'm soothsayer and I'm saying it's going to happen. But if we see a pop above 30, you better be loaded with your sell buttons on the any of the VIX calls you have, because we haven't held above there for very long, nor did we hold above it very long this week. And that's why I think 50 Cent was in there, palms out, selling his or her position because they needed to lighten up a little bit on those expiring May VIX positions. I'm sorry, March VIX positions. All right, folks, we do have a webinar tonight. It is completely free. You can join just by going to marketrebellion.com/register. All of you who do that will get a link emailed out to you. That link will allow you to watch it live with Mark, with myself, with Justin Nugent. We're all three going to be there on the webinar, giving you some strategies, telling you what we're doing in live time. And for those of you who, hey, that's tough for me to make a 4 o'clock Eastern time, well, we also send a copy to everybody that registers. So by all means, we usually get 6,000 to 10,000 of you that register. So make sure you register. Register at marketrebellion.com/register. All right. Now, as far as stocks, Pete, Intel, they go after the former board member and Cadence Design Systems CEO, Lip-Bu Tan. And I think I'm getting that right, Pete. Lip-Bu-Tan, Lip-Bu Tan. Very highly thought of in the tech community. And that's why Intel got a pretty significant boost in the pre-market today, right, Pete?
Yeah, they needed stability, John. I mean, this is something where the CEO, Gesslinger, he stepped off as the CEO back in December. Well, he was pushed out, actually, but nonetheless out. So because of that, they had been waiting. They tried to get the right person. I think that they did. I think they did a magnificent job. That's why they were being rewarded today with the stock actually popping to the upside, because I think people were very excited about who the new CEO is and potentially what he's going to be able to do for Intel in the future. I mean, let's not forget, John, this is a stock that's been as low as 18, but as high as 45. So a nice big move to the upside today. Last I saw, the highest level I'd seen at least was about 24.50. Might have been higher than that, but nonetheless, a nice move to the upside. And I think they did get the right guy. And I think that was basically something that was told to us by the reaction that people had buying into the stock today.
Yeah, a huge move out of the stock today, Pete. Yeah. It's already traded 163 million shares so far today. Normal is half of that. Mm-hmm. So that's a big move, and this is a stock that really needed some good news too. Yeah. So a 16% pop versus what? NASDAQ is down 1.5%. So it is definitely a strong move on a day when the NASDAQ ain't strong.
Right.
All right, let's take a look at DG, Dollar General. Now, this one, Pete, kind of a tough one to read because they exceeded consensus estimates in this case, but they focused on the growth and where they're going to be, because at first it sounded like the numbers that the CEO was saying that they're going to do were not so great. But then the CEO, a guy named Vassos, basically came out and said, you know what, revenue, $40 billion. That puts them in a class, pretty high up with retailers. And a lot of us know that when people are squeezed, they tend to go more to Dollar General, right, Pete?
Oh, no doubt about it. And I think that's exactly why people were so excited today. They saw the fact that there was some growth with the revenue, up about 4.5% year over year. So that's not such a bad number. When you look at inflation itself and how that's been affecting things, that certainly did boost some of the core customers that they've got. The store layouts was something they talked about too, John, the repositioning of a lot of what's going on with the stores and more stores. They did cut some stores, but they also added some stores. So I think that when you consider what we're dealing with right now, financially and economically and everything else, I think there's a really good argument you could make to why Dollar General, Dollar Tree, maybe Walmart, although Walmart, ever since that earnings and that guidance that they gave, John, they crushed it on the earnings, Walmart did. And it was the guidance that everybody said, well, wait a minute. And I'm still puzzled by why they gave that guidance in the first place. Stock was almost $105. It was 104. And now it's down there closer towards 80. I think at some point, and I'm waiting to see it because I've seen put buyers, I have not seen huge call buyers come in there, but that's a name that I'm keeping an eye on as well, because given the environment that we're in right now, whether it's Dollar General or something like a Walmart, there is going to be further trade downs, I think, over time. So we'll see. I haven't jumped in Walmart yet, but I think that's another one that has potential upside into the future.
Well, it certainly was a lot of turnover in that stock today, Pete. Mm-hmm. And then you've got Adobe. Adobe comes out, they have PageMaker and all these other things. They're basically anything digital on the web, Adobe does it. And they usually do a great job. But the companies surpassed estimates, but their outlook, of course, less than spectacular. And this stock can't get out of its own way, Pete. The normal turnover for Adobe shares is about 3.6 million. So far, it's traded closer to 9 million shares by 1 o'clock Eastern time today. So that's a lot of turnover. It's down 13%. And people are just, shaking their heads over this one because for all the things they do right, they haven't been able to get it right in a while.
Yeah, they've got some problems. They hit new 52-week lows, and it's probably even lower now because last I looked, it was down 11%. You're saying it's down 13% now. So 386 was the number that was the new 52-week low, and I'm sure it's even lower than that now, John. So with a 587 on the upside. When you look at this one, you said it exactly the way it is, which is the guidance. I mean, the numbers they put up, their results were okay, but the guidance, not so great. Analysts just were lined up trying to change what their price targets were on this particular name, John. When I look at it fundamentally things look pretty good. The problem with that is that's fine. It's great that the fundamentals are good, but with that kind of a guidance that they delivered, it's just not going to make it for the stock, especially right now. So when I look at this one and I see the fact that its free cash flow is $8.3 billion, I'm pretty excited about that. I think that sounds pretty great. Balance sheet itself looks great. But if they don't see the future looking very bright, that's why people are pounding this stock today. And by the way, it's not like it's a just today story. This thing has been getting closer and closer to that 52-week low and establishing a new 52-week low today. So this thing has been under pressure for a while now, Adobe.
Yeah, it has, Pete. And I love what they do. But like you said, Pete, until they really give it an endorsement, like buying. I looked at our blog, by the way, folks, today for the Heat Seeker, which is our algorithm that takes a look at buying and selling. Are there people that are betting on bounces? Are there people betting that we go lower and so forth? And putting their money where their mouth is. So far today, Pete, 25 readings, and 20 of them were buying call spreads. 5 of them were buying put spreads. So that doesn't mean that we have to go higher, but I certainly like the ratio in terms of the potential for a bounce here, and that and the fact that the VIX was practically unchanged after, pretty severe drops of 1.5% for the NASDAQ and, similar drops for the Russell and the Dow. That gives you a little thought that maybe people are playing for more of a lessening of the fear, if you will, in the market. Yeah. All right. Fabrinet, FN, this one, they enter into a deal with Amazon. Now, why is this a big deal? Because Amazon gave them about 381,000 shares at a price of 208. Well, that means that, of course, this is a cashless warrant, if you will, that doesn't expire until 2032. That's a lot of confidence that they have in Amazon, but also that's found money for Amazon, Pete.
Mhm.
So if they like this stock that much that they enter into an agreement with Fabrinet to do this, that probably means that eventually Amazon might be one of the owners, not just a shareholder of this company, right?
I would say that was right. Yes. And 208 being the number. And the stock was jumping pretty nice, John. I think it was up, 10, 12%. Maybe it's getting pulled down a little bit now, obviously, as the markets are selling off. But that's what this is all about, packaging. Well, who uses more packages than the biggest retailer in the world in Amazon? So amazing. It's a strong balance sheet that they've got here at FN. It's interesting. I like what they're doing here. And it's obviously something where you've got some shorts that are probably scrambling a little bit in that particular name, John, because they're anywhere between 5 and 8% on the short side. Makes it pretty interesting. And I'll tell you what, this whole transaction, I think it makes a heck of a lot of sense what they're doing now. And there might be something into the future as well on this whole thing.
Well, we shall see, Pete. All right. Let's talk a little bit of sports, Pete, in the Rebel Sports in the couple minutes that we've got left. What do you want to hit today?
I think the first thing I want to hit is this, John. So we've gone through free agency, right? And we've been giving up numbers and numbers and people and all these different moves that we've had. And it's probably been as busy as I've ever seen it. Obviously, because of the fact that the salary cap has gone up 22 million, 53 million over the last couple of years. There's a lot of reasons why there's teams out there that are going and looking for what they want. So before I hit another one of giving them grades, I figured we'd hit Aaron Rodgers because he hasn't signed with anybody yet, right? I mean, everybody else is going here and there, and Sam Darnold's going out to Seattle, and this guy's going here. It's unbelievable how much movement we are seeing, and the dollar amounts that are being spent, John, have been absolutely amazing. So I think what's interesting for me is Russell Wilson. Now, he actually had an okay year. It wasn't a great year, but an okay year with Pittsburgh. And they needed a little something extra. So does he go to Cleveland? Does he go to the New York Giants? Where does he go? Well, we know one thing. Aaron Rodgers is not going back to the Jets because they finally actually fully released him, John, to the tune of $49 million in dead money charge and $35 million dead cap for 2026. So the Jets are probably not all that excited about what they did with Aaron Rodgers and how this experiment went. And it just shows you that sometimes foolishness gets in the way of trying to get these things done, and the money that was spent there, probably a little ridiculous. There's another name out there that nobody's really kicking around, John, that I'm curious about is Kirk Cousins. I mean, was it the wrong place for him to go in Atlanta? He had a great couple of years with the Minnesota Vikings. So, you kind of wonder, here's two quarterbacks that are sitting there and they have not signed with anybody just yet. Maybe it happens today. I don't know. But really, really pretty interesting, I think. And where do you put, this is the question for you, I guess, Aaron Rodgers? Does he go to Pittsburgh, like people are saying, with Mike Tomlin there as the coach? Because he ain't going to be telling anything to Mike Tomlin. I could guarantee you that, because Mike Tomlin won't put up with it. But will he sign with Pittsburgh? Because that's the biggest rumor of it all.
Certainly that one is the hot rumor, Pete. Yeah. Many people in Green Bay would love to see him follow in Favre's footsteps. And that is kind of get dumped by Green Bay, end up with the Jets, and then get dumped by the Jets and end up with the Vikings. But could he be at Pittsburgh? Yeah. Is he a long-term solution for him? No, of course not, because of his age. But does he have some gas in the tank? Yeah, and it might not have been a bad deal for the Jets, Pete, had he not, ruptured his Achilles 2 years ago almost now. That was, of course, the thing that turned it into a terrible deal for the Jets. And now they're, like you say, they're stuck with a lot of salary that they have to pay out, especially just cutting them, not even getting a trade for anything, not even a bag of balls.
It's amazing. All right, John, a couple of, let's do a little bit of a check out of a grade for the Minnesota Vikings. We talked about that yesterday already. I gave them an A. I think you agreed. They did everything they needed to do. Their offensive line has always been their Achilles heel, and they went out and they actually signed 3 different guys to be members of that offensive line. And they gave some pretty good money. Only issue is some of these guys were hurt last year. So you're giving a lot of money to guys who are coming off injuries. That's the only reason that maybe it's not a full A. Maybe it's an A- or a B+, but they did the right thing, and I think that that's the important part about what they did. You and I talked about the Chicago Bears. We both gave them an A. Why did we do that? Because they signed some offensive linemen as well. And they're much bigger than that as far as free agency, but I'm just focusing on the most important part, which is what did they need to do? Well, that quarterback down there in Chicago has gotten sacked way too many times. He's athletic, he can run, he can do it all. And the problem is he couldn't get away from all the guys that were the jailbreak that was coming at him. So you guys added some offensive linemen. I thought that was big. Here's the negative side that I've got for you, John. The 49ers, they've done absolutely nothing for the most part. They've lost a bunch of different players in free agency already. And I think giving up on Debo, I think Debo Samuel, the receiver, is a bad move. So unfortunately, I got to give them right now a D- to an F. I got the Colts, I gave a D+. And I don't even know why they got the plus, but I gave them a D+. And my rationale there was they've lost offensive linemen. They've got a quarterback that they went out and drafted a couple of years ago who's just not working out. He's the most talented athlete. And this is another case where they fell in love with the combine. Well, the problem is football's not all about combines. It's about what your production is on the field. And they did that with their quarterback, but they've signed Daniel Jones, who talent-wise might be somebody that would be pretty good there. And maybe he pushes the other quarterbacks that are there and maybe they get somewhere. But I look at that one as a bit of a problem as well. The New Orleans Saints, John, they signed Chase Young to a $51 million deal. A, that's a lot of money. B, he's getting older. And C, these guys got no cap space. They got real problems with their entire thing. And they're going out and paying an older guy a hell of a lot of money who more than likely is going to get hurt. So I think New Orleans gets an absolute F. But then when you look at the Giants and you look at the Jets, what's wrong with New York? These guys can't find their butt with both hands at this point in time, John. I mean, where's their quarterbacks? What about Justin Fields? Is he the right guy? Maybe, but maybe their offensive line is still an issue too. So I think there's a lot of questions about that. I give the Jets and the Giants, as of right now anyway, a D to an F. Do you kind of agree with where I'm going with these things? Because you've got to have your base, and some of the teams that stink don't have a base. They don't have an offensive line. They don't have a defensive line, and that's a problem.
Well, Debo got a little big.
Yeah.
Both in his britches, Pete, and in his waist in San Francisco. And San Francisco got tired of that, and they got to pay Purdy a lot of money.
Yeah.
Because obviously he's been playing in his rookie contract until now. Mm-hmm. So he's going to get paid. I think San Francisco doesn't have a lot of what they need right now.
Yeah.
If you're the Rams, if you're Seattle, you're kind of happy that the Niners aren't that big, worrisome thing on your schedule like they had been up until now. Throughout the rest of free agency, which, there's no end to it. Once it starts, it's not like they have a whistle and it ends. It could go all the way up until training camp. And I think, Pete, the draft, which is April 24th or 5th, something like that, in Lambeau Field. I think Cincinnati really needs to show Joe Burrow some love. Yep. They really need to make some moves in that, not just here and there. They need to really make it a commitment to him, because he is one of the best quarterbacks in the NFL, and he needs the surrounding cast to be upgraded. Mm-hmm. So that's what I'll say to that, Pete.
Yeah, I totally agree. They need to help him with the offensive line. That's point blank. You got to give him an offensive line. He's getting hit all the time out there. He's not a guy like Josh Allen who's big as all get out and can take these hits. So because of that, they got to support him with an offensive line. He's got the receivers. He's got the talent around him, but you still got to have an offensive line. And that's why the Vikings and Bears to the yesterday as well as today that you and I talked about, that's why they have a fighting chance, because I think they've really done a great job of getting the right kind of offensive lineman, and you need that for these quarterbacks, and they need to have that time back there. They can't just get rid of the ball in a second and a half. They need a little time. So they've got to have the right offensive lineman, and I think they've done a good job with that, and I think you're exactly right. I think Cincinnati better do that as well.
Yeah, well, let's hope they do, because you and I love watching Burrow play.
Yep.
All right, folks, thanks very much for joining us again. As you know, we don't do the Rebels Edge on Fridays yet. But what we encourage you to do is join us for the webinar, the free webinar this evening. It will be at 4 p.m. Eastern Time, and you can join us by just going to marketrebellion.com/register. We'll also send you a copy of it, so you don't have to scribble away as fast as you can. And if you don't make it at 4 o'clock Eastern, that's okay, because we'll send you a copy of it. So thank you. Have a great weekend. Pete and I will be back Monday at 1 p.m. Eastern Time.